Time now for the big three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts as he does every day. And here to take us through the trades, Dan Deming, Managing Director, KKM Financial. Thank you both for being with us. So we'll start with an energy name, which of course oil has been a hot topic, especially with today with the news that the U.S. is going to release oil from the reserves. So that's one story that's surrounding oil. Another, Seeking Alpha, was so positive on Chevron, Dan, saying that it's a very good dividend stock, an inflationary environment. It's a good one. So what do you think here? I know you're buying a call spread on Chevron. Why is that?
Well, because of some of the storylines that are currently in the market. And I think just from a positioning standpoint as well, when you look at Chevron relative to some of the other oil names, certainly all the names are getting a big lift today based on some of the announcements in the last 24 hours. But I think, Chevron is an integrator. I mean, it's important to distinguish that Chevron is a bit different than some of these other names, because basically they just want the pipeline to continue to flow and they want their supply chains to continue to move. Really doesn't matter so much where the price of oil is relative to just the activity that's taking place. So I think Chevron continues to be positioned well here. As you mentioned, the dividend is very attractive to dividend players. This trade example does not necessarily include that, because I'm looking at a trade or buying a call spread for the trade example, not owning a stock outright. But I think the trends are in place here, Nicole, that we're going to continue to see upside momentum in Chevron for the next couple of months. So I want to take advantage of that by basically looking at a 2-month call spread in January and participating to the upside. But again, defining my risk, but having the ability to participate to the upside.
Okay, so Ben, your thoughts?
Well, we're certainly seeing some participation to the upside as of recent. Chevron's taking a little bit of a breather after a pretty solid run-up into the month of November. If we could just take a look first and foremost at the 30-minute time frame, you can see a nice bid which has come into play. They recently topped out right around 118. Just up and through that level, but this was part of a nice move. We're talking about, well, throughout the month of October, you can see off the lows from down around the 20th of September. And while earnings didn't really do much in terms of provide a real catalyst one way or the other, you can see again the sideways consolidation which has been forming. 112-ish, we'll call it, up to 118, and really just this high conviction trade, and as mentioned, a bit of a breather right now, and just acceptance of that move up throughout the month of October. And well, as we just take a step back from that intraday, intermediate hourly look, you can see, or 30-minute look, you can see the daily time frame in this instance, and how this shows that move from 92 up into these levels we're trading right now. That's just part of the bigger move up, one leg of that bigger move up off the pandemic lows from 5160. And again, the trend environment that continues to remain intact here, well-defined trend up. Now, I did actually take a step back and look at the weekly time frame, because I wanted to point out that, well, I mentioned again the move off the pandemic lows we saw. Well, recently that was, again, we're talking down around that 51, 52 level. You can see that that was also support that we saw back in 09 and 2008, 2009. But also you can see some of the hurdles that we have above right now. So 130 to 135 is going to be a key area. But yeah, I'd have to agree in terms of some of the momentum we've seen to the upside, the focus being on energy stocks, crude oil in general, and well, I think this will continue. So a nice move up here. We talked multiple times in the past about how once you kind of work your way through a range that you've been in the middle of a range, you kind of favor, in this instance, the long side. I think that's what we're starting to see play out here. But 130 to 135 would be the area, the range I think we need to have our eye on, that upper extreme.
Yeah, I mean, what a chart, taking us all the way back to the Great Recession of 2008, 2009. Dan, as you look at this chart, right, and Ben's making some great points showing the tops and bottoms there over the years. That being said, we have this run, this recent run over 3 months of about almost 20%. So could you define your call spread a little bit more? Just explain
Sure.
for folks who want to do this trade with you.
What I'm seeing here is similar to what Ben has just pointed out from a technical standpoint. And also, as I pointed out initially, in the fundamental stage of where they are, I think right now, as they come through the pandemic and out the other side, much leaner as well. So I am looking for this trend to continue to push back up towards those highs, maybe not taking them out, but certainly over the next couple of months, I think they'll challenge those highs. So The trade example is in January, and it's a 115, 125 call spread. And you could put that on for about $3.50 with the stock trading right around 115 here. And again, it's a little over 2-to-1 risk reward, and participate to the upside, define your risk. But again, maintain, if Chevron was to maintain this upward trajectory, that I think that this call spread has a high probability of becoming fully valued if we, again, even challenge those highs that we did see from the earlier cycle.
Yeah, we see the max loss and max profit there. Ben, your thoughts on this trade here?
Let's dive back into the weekly time frame, and I think, Dan, we're at a key level right now. I mentioned the 130, 135 area, but this is the first hurdle prior to that level. And, well, take a look here how we have a trend line that we're trying to get up above here right now. The last couple weeks, it stalled out a little bit at this level. That's what I was talking about in terms of the hourly time frame when we first started looking at price activity in CVX. But here you can see the trend line as we've come off the, well, highs from beginning of 2018 and a couple, levels that we've failed to get up above here. But it does look like at 115, 116 right now, we're trying to get something going to the upside. So again, certainly, again, an area where you want to have heightened awareness in terms of CVX.
Okay, so let's turn our attention now to Workday, which has been a recent winner, also a winner year to date. Dan, you're watching this stock in particular for a good trade. Tell us what it is.
Yeah, I mean, Workday is coming under some pressure recently. I mean, the whole cloud space has really come under some significant selling pressure here in the last couple of trading sessions. But ultimately, I think when you look at Workday overall, the trends are still there. And I think the revenue trends are there. The subscription trends are there. They recently were upgraded by Wells Fargo and Barclays to targets of around $350. So I think that, by and large, there's still some upside here, and particularly given the fact that we are backing off and testing the 50-day moving average currently in this recent sell-off. So I'm looking for Workday to continue this upward momentum heading into 2022. I think that there's another way to play this from a trade example standpoint. And what I'm looking at in this particular instance, because the volatilities have increased with the sell-off, is a risk reversal. And I'm looking at a January risk reversal where I'd sell the 250 put, buy the 310 call. You can do that for about $2.30 credit right now. And again, it's a level at 250. It's a level I don't mind getting put into the stock if Workday was to trade down there over the next 2 months. If we do see it flip and maintain the upward trajectory after the selling pressure, that I think that it will take 310 out very quickly and regain its footing towards 350 in the next couple of months.
Right, so the selling pressure is really very prevalent right now. As we said, that trend has been higher. I mean, that 3 months, it's up 11%. Year to date, it's up 14%. But you talked about the recent selling pressure that we've seen not only in Workday, but also in the group, in the sector. Ben, your thoughts on what Dan's saying here makes some sense.
Well, I agree with Dan, some recent sell pressure, but in the past, these have historically been buy opportunities in terms of Workday. Dan mentioned the trend environment to the upside. It still appears to remain intact. And first and foremost, the weakness that we were speaking to in terms of just the sell-off in earnings. But I did take note of the fact that although we saw some weakness, a big move lower in reaction to earnings down to 268, notice how we've yet to take that out so far this week. So again, in theory, you'd think if there was a lot of concern related to that, investors over the weekend would have been able to have time to think that over and come back in full force with another wave of selling. You can see, in fact, they actually bought this one up to begin the week Monday or Friday, I should say, to end the week. And then how Monday, again, yesterday and today, we still have yet to take out those lows from the end of last week. So that's key, first and foremost. Next, take a look at the more intermediate time frame. You can see the hourly, and just a quick look in terms of how a little bit of a different reaction to earnings this time around relative to what we saw last quarter. They actually spiked up, if you remember, and again added to those gains throughout the month of end of October into the beginning of November, prior to topping out around 308. But quick look at the daily time frame just shows the trend environment Dan was speaking of in terms of, and what I'm also noticing is very reminiscent of what we saw last year as price worked its way back down to this 200 level on reaction to earnings. We ran them up in reaction to earnings back in the summer of 2020 and then sold off big time, but that as well turned into a bit of a buying opportunity. So this will be key to see if that happens again. Some price decay worth taking note of here. But again, in the past, in this trend environment to the upside, this have all provided for long-term buy opportunities. We'll see if that plays out here again.
Yeah, and Dan, I wonder too if we have a rising rate environment and how that hits some of these names overall. Is there any part that goes into that, and would that play a picture? Because today, right, we see 10-year bond yield on the rise. Is that something that you're watching or not at all?
No, it's certainly something that to be aware of. And I think it's a great point, Nicole, because you're right. I mean, the tech sector and some of these names, these growth names, are vulnerable to the idea of rising rates because that's basically how their projection, their earnings projections are priced. That has a big influence on those projections. So, if we were to see a significant rising rate environment, then that would be a little bit of a concern. I think the growth prospects still outweigh that potential. And yet the jury's still out as to how that's going to play out as we move into 2022. I know right now it looks like a better than 50% chance of a hike, in June of next year is being priced in with the most recent adjustment in the Treasury markets. But I think that these names, will be able to sustain a hike or two as we move into next year if that was to occur, given the fact that I think from a revenue standpoint, from a growth prospect, and just the positioning and the innovative nature of some of these cloud names, they'll be able to weather a rising rate environment.
Mm-hmm. And then I wanted to turn our attention over to Dollar General. What a different picture Dollar General is from, I know it's all retail, but if you compared it to something like Macy's, which is killing it, Dollar General is doing, 3 months it's down 4%. Year to date, it's up 6%. It's certainly is it ready for something? You tell us, Dan. What are you watching when it comes to Dollar General? Because it's a completely different picture than some of the other retailers, like I said, Macy's, for example.
True, yes, but Macy's was coming from a much further trough than Dollar General's experienced at any time over the last several years. So, yes, Dollar General hasn't had the year that it's had in the past when we had, certainly I think in 2020 it would benefited from the trends. In 2021, the reopening trends, the idea that there was a substantial amount of money to be spent, that the discounters were, basically discounted, I guess, for lack of a better term. So, but overall, the general trends for Dollar General continue to be a very positive environment as far as I'm concerned. The company is about as efficiently run as it can be. It's just a big cash generator, has been for years and years and years. And I think that, the environment, if we do see a rise in inflation or maintain this higher inflationary environment, the Dollar General is going to benefit from that at some point. I think they just will. Either it's going to slow the economic activity down where they're going to, we're going to see these discounters come back into favor, or, they're just going to continue to be efficient at what they do. And if we do see an increase in economic activity over next year, they'll benefit from that as well. So I'm really looking at what am I? I got a buy right here. So yeah, I'm looking at a buy right. So I do want to own the stock at this level, I think at 226, and then write a call over the top of it just to collect some premium, and then have a decision, I guess, in the coming months if I want to get out of the stock, should it rise into that 250 level, or if, again, if I want to write another call if we don't quite get there. But I think at this level, Dollar General looks attractive.
Okay. And so as you look at this covered call here, Ben, your thoughts on this?
Well, I agree with Dan in terms of the longer-term trend environment to the upside. And while it's coming under pressure as of recent, similar to what we're just talking about in terms of Workday, it does seem like some of the sell-side activity has been, buy opportunities. Here's a good look at the more granular 1-minute time frame. Just wanted to take note of the selling that we've seen from 230 down to this 222 level, but seems to have slowed and lost some of the momentum throughout the day today. We're just mostly sideways, kind of range bound around 224. Now, step back from the selling we've seen this week, again, 230 down to 222, just sort of points to what we're seeing in terms of, a bit of range-bound activity, just not a lot of directional conviction for the most part throughout the month of November. We've been from 217 to 231, and you can see, Nicole, Dan, how we're right in the middle of that range right now. So not a lot of directional conviction, but as we zoom out a little bit, you'll see the trend environment, which has been in place throughout the beginning and into the middle end of October. Here's that sideways consolidation throughout November. Another step back, though, does show, well, again, how characteristic of this trend environment. The dips have been short-lived. We're seeing some higher lows come into play here and a decent move up here. Also, take a quick look at, well, just this move up and how we just recently filled the gap that we saw back in August of last year and or earlier this year. And then lastly, quick look at the trend environment here on the daily time frame, a little bit more time. You can see again how all of these pullbacks in ticker symbol DG have provided to be opportunities, and you can also see how that long-term trend environment remains intact and continues to be to the upside.
Yeah, and that's a beauty when you look at that long-term trend, right? Thank you both very much. An exciting big three. I like that all three, too, were in different areas, right? From Dollar General, Workday, Chevron, Dan Deming, KKM Financial, Ben Lichtenstein. Thank you for the big three today. Appreciate it.